Okay, so here's the thing. Most traders miss the easiest and biggest moves in the market. They close out early, grab just a small profit, and then just watch the market keep running without them. But here's the thing. You don't have to miss that move that can potentially double or triple your account size. So when you understand top-down analysis, you will know exactly where you entered and where price might end up, because these patterns repeat every single week. And the best part is you can hold these trades for days or even the whole week. It makes trading easier even on days where there are no new setups. The market keeps moving and you are still in the trade without any panic at all. So in this video, I'll break it down step by step, starting with the daily chart for direction, refining on the 4-hour chart, moving into the 15-minute chart for setup zones, and finally zooming into the 5-minute chart for precision entries, aka sniper entries. By the way, don't forget to like and subscribe so you don't miss more of these breakdowns. And if you want to go deeper, I have mentorship and signal packages. The link to my website is in the description below and in the comments. Everything you need is right there. All right. So first things first, we'll start with the daily chart. Now, these are the only things that you need from the daily chart for you to catch these major moves. We are trying to catch the major moves, not the smaller moves. Okay. So first, you're going to need the internal range liquidity. This internal range liquidity are just daily fair value gaps. These are going to be your entry zones. You have to be aware of these. All right. When you enter into these daily fair value gaps, your target is going to be external range liquidity, which are just swing highs and swing lows. Why do you need this? Because price usually moves from imbalances and then go all the way to swing highs and swing lows to grab external liquidity. All right. The second thing that you need is going to be external range liquidity. This external range liquidity is just swing highs and swing lows. These are also going to be your entry zones on the daily chart. I'm saying entry zones, not entry setups. Okay, so make that distinction. All right. So the target, when you are moving from that external range liquidity, your target is going to be internal range liquidity, which is the fair value gaps on that daily chart. What this means is if entry is on external range liquidity, price is going to rebalance by filling fair value gaps. All right. So in short, what I'm saying here is price is supposed to move from internal range to external range or external range to internal range. This internal range is just fair value gaps. External range is just swing highs and swing lows. All right, that's all you need to know. Let's move. This is V75-1S, the daily chart. Now, the moment you just look at this picture right here, you can already see like there are points where price exploded aggressively, making these huge moves here. All right, and as you can see, this was a downtrend. Okay, but you don't have to just look at it and then be like, okay, this was a downtrend. No, that's not how it works. All right, because if you are just looking at that, most of these trades you are going to miss them. Okay, but if you apply what I'm just from telling you, when you start looking at it from internal range liquidity, price moving from that fair value gap and then going all the way down here to that external range liquidity, if you enter into that zone there, the internal range liquidity, this is supposed to be your target down here. Same here, if you enter into that fair value gap, that daily fair value gap, this down here is supposed to be your major target. Of course, there are going to be minor external range liquidity. Okay, there is always going to be some sort of pullbacks. Okay, but the main ones are going to be very obvious to you. Okay, so from that internal range liquidity, you have that external range liquidity. And the recent one, this one here, you have that internal range liquidity, and then external range liquidity has just been taken out. And as you can see, price already left some internal range liquidity there. So that is something that you can look forward to. Now, when you are looking at the daily chart like this, like I said, I'm trying to make you understand how you can catch these big moves. These require a lot of patience, but it's not like you're just watching the market all these days you are not trading. No, there's what we call intraday trading. Within the 24-hour period, you are still taking trades. These are just the major movements that you can't afford to miss. If you had a really good month, or maybe last week you had a really good trading week, it was a good trading week, these are going to be like your bonus. Okay, and the bonus is supposed to be really huge. This is where, like I said, when I just started the video, there are going to be days where you don't see any setup. Okay, during the day you don't see any setup, but if you have a trade running, what it gives you is a lot of confidence and patience, because you're already in that trade and you have a target already. So even if you don't see, let's say on this day you didn't see any trade, you didn't see any entry setup, okay, maybe on the 15-minute time frame or the 4-hour time frame, the thing is you already have some trades running. So it gives you some sort of edge. Okay, it comes, if there's one thing that you will need to avoid, is for you to be in a trade just because you have to, just because you want to get involved. No, that is not the right way. These are trades that you don't need to miss out. So from this daily chart, the next time frame that you have to go to is the 4-hour chart. So let's go to the 4-hour chart now. On the 4-hour chart, just like on the daily chart, we don't need a lot of things. You have to keep it simple and straightforward. So first thing that you are going to need is going to be a point of interest. The second thing is going to be a liquidity grab. Now, on the point of interest, this is the structure that is going to show up. Okay, when I say a point of interest, I mean an order block or a fair value gap. It's going to be either of those. Okay, it's going to be an order block or a fair value gap. All right, so if you have that, let's say this is a fair value gap or an order block, and then price goes all the way and then taps into that. That is going to be your POI. Now on the liquidity grab, it's using the same structure here. The only difference is that when you have a POI, this thing right here, this is a very important zone. You have to be ready the moment you see price doing this. Okay, the only thing that you are going to wait for is for price to grab all this liquidity right here. So this is trend line liquidity. This is not the only liquidity that is going to be grabbed. Sometimes it's just going to be equal highs. All right, since you are looking for a sell here, it's just going to be equal highs. So that is going to be the buy side liquidity that needs to be taken out. You should never take a trade when price is consolidating like this. Wait for this to be cleared. What follows after that is going to be a lot of profits. That I can promise you. All right, so let's go to the real chart. Now, using the same chart, on the 4-hour time frame, you can see that the daily labels are still here. They are going to be useful by the end of this video. So just make sure you stick around. So on the 4-hour chart, like I said, you are looking for points of interest and also the liquidity grabs. Now, liquidity grabs require liquidity pools. You need a liquidity pool for you to have that liquidity grab. Liquidity pool is just price consolidation. This happens either before a point of interest or right there in the point of interest. So what I mean is this. Okay, so up there you have a 4-hour point of interest and a buy side liquidity. Don't worry, I'm going to zoom in. 4-hour point of interest, buy side liquidity. 4-hour point of interest, buy side liquidity. So when you try to zoom in, this is what happens. Okay, so when you know what a single candle order block is, you can instantly see that it formed right in the daily internal range liquidity there. Okay, this is good for confluence. Now, when you look down here, the moment you see, especially when price is approaching an internal range liquidity and for some reason it starts consolidating somewhere, making some sort of trend line like that, you need to be ready to pounce on that. You just need to be, you can't afford to waste this opportunity. Okay, you just need this to be cleared and then price to tap into that 4-hour point of interest. All right, that's what you need. So you can see here price was just all over the place. Okay, you can see how easy it was for it to move all the way up there, and then for some reason before it could just enter there, it started making all these noise right here. So this, once it's taken out, it doesn't need to be taken out all the way like this. The reason it was taken out all the way like that is because the 4-hour POI and also the daily internal range liquidity was all the way up there, so price had to tap into something. Okay, all right, so when we move even down here, the same thing, we have a single candle order block. That's our point of interest. Even here you have a trend line liquidity right here. Okay, so this one formed, you have the daily internal range liquidity. Okay, and then up there you have the 4-hour point of interest. So you can see why price did not go all the way, okay, to take out everything that was lying even up there, because price was already in the daily point of interest and it already tapped into the 4-hour point of interest. Okay, so as long as this has already been swept here, it has been grabbed. Okay, you can see this trend line liquidity. This is buy side liquidity. Okay, it was taken out and then price started dropping almost instantly. All right, so even down here, this is the recent one. Price first tapped into the 4-hour POI. Okay, the 4-hour POI was already in the internal range, in the daily internal range liquidity. So it's very easy. Price doesn't even need to go all the way. Okay, it doesn't need to go that far out, but you can already see how price was just playing around this level. Here you can see how easy it was for it to expand to the upside, but once it reached that area, so these areas are not random. This is what you need to understand for you to catch these very easily. Okay, the moment you see a lot of wicks forming around a certain area, there's something there. It's not random. It's not no buyers or sellers coming in. No, it has nothing to do with that. Okay, so this right here, once this was taken out, you can already, it was almost instant. Once this was swept here, price started dropping, going to the daily external range liquidity there. Okay, so from the 4-hour chart, now we are going to go to the 15-minute chart. All right, so we are on the 15-minute time frame now. Unfortunately, as you can see, I wanted to show you all the 3 trades, but the chart can't go all the way back. Yeah, so the only charts that we are going to, it's going to start from here. The only levels we are going to use. All right, so on the 15-minute chart, from the introduction, I said that you are going to use them for setup zones. Okay, setup zones. Now, here's the thing. On the 15-minute chart, you can also do your entries according to your risk management. Okay, 15-minute chart and the 5-minute chart can be used for entries. That's what I'm talking about. Okay, all the way to 1 minute, they can be used as entries. Now, when you are trying to use 15 minutes as your entry, make sure you are not risking a lot. Make sure you are not risking a lot. If the setup allows on the 15-minute chart, as long as the setup is okay and you are not risking more than you should, you can just go ahead and enter. Okay, so what I mean by that is this. So you can see after price took out that buy side liquidity there, okay, and then almost immediately, now by the way, there are a lot of entry setups that you can use. There's a lot. What you need to understand is price movement, okay, not patterns. You need to understand price movement. Do not just master patterns. All right, it's going to be very easy for you because there are a lot of trades that you'll be entering without a market structure shift and you will just be fine. Okay, so first of all, understand price movement. Okay, so here you can see there was a market structure shift and then price left that fair value gap right there. Okay, now if you entered in here, you can also refine. If you want a more of a sniper entry and reduce your risk even more, you can go down to the 5 minutes all the way to 1 minute. Okay, that is going to be just okay for you, but make sure you are not trying to overthink these things. Okay, one thing that you need to understand is even after learning this, you are still going to lose some trades. All right, they are just trades that you are going to catch 1 to 30 risk to reward ratio, 1 to whatever risk to reward ratio. That means, let's say per week, at least you are catching at least 1 to 15 risk to reward ratio, 1 to 25 risk to reward ratio. It means for you to blow that account using the same risk, if it's 1 to 20 risk to, you have to lose at least 20 times for you to blow that account. So keep that in mind, guys. This is like the best way for you to grow that account, to double, to triple that account size. Okay, so when you enter in there, if you want, you can also incorporate the fibs. Maybe you are being too skeptical. Okay, So there are certain levels that the fibs really respect. Okay, I still don't understand it. What I understand is that it respects the equilibrium. Okay, but these levels, I don't know why they are really respected. But yeah, you can try to enter like that. Okay, your risk is already there, and then just try to hold that trade all the way down. Okay, all the way to we are going to external range liquidity. All right, that's what we are doing, all the way down there, just like that. So you are going to get that 1 to 28 risk to reward ratio. Even if you are using the smallest lot sizes, your account is going to grow at least. Okay, that it's going to be very obvious that okay, at least my account is growing. All right, so this doesn't just come by accident. So on the recent one here, okay, so you can see after price takes out this buy side liquidity, we are on the 15-minute chart. You can see that if you waited for price to give you an entry setup on the 15-minute chart, do you know where you would have entered? You would have missed a lot. Okay, of course, price is going to take out inducement. Okay, even go into that internal single candle order block, but you are going to miss a big chunk of this trade. All right, compared to if you were on the so never, if you are just trying to have that sniper entry, do not stay on the 15-minute chart alone. Okay, go all the way down to 1 minute. All right, because here there was a really nice single candle order block. Okay, now this is not the only thing that I was looking at. This is on the 5-minute chart. This is the 5-minute chart. Okay, if you go down to 3-minute chart, so even for entries, you can use a lot of time frames if you want. Okay, 5 minutes, 3 minutes, 2 minutes, 1 minute. Yeah, you can use all those. So what you have is, first you have the 5-minute single candle order block. Okay, and then here you have that internal fair value gap, and then on the 2-minute chart, if you want, you can just be labeling everything, but you won't have enough time. That one I can tell you. The thing is, once you miss it, it's already gone. Okay, it's rare that price is going to give you a second chance for you to enter, because when it starts dropping, it just drops. Even here you have that fair value gap. Okay, even 1 minute you can go, since this is a recent trade, so you can go all the way to 1 minute. This is the only reason you are entering is because of this. Okay, buy side has been taken out there. Okay, you are not just entering anyhow. All right, so on the 1 minute chart, there was a market structure shift here, and then price went into that fair value gap right there. All right, so here you even have a choice. Either you enter here, and then instead of you, okay, let's do this. Where's my, okay, so if you entered maybe somewhere here, you either put your stop loss all the way above there, okay, or you put it just above the 5 minutes. This is the 5 minutes scope. Okay, single candle order block right there. Either way, what you are targeting is the external range liquidity there on the daily chart. Okay, let me go to 15 minutes. So also, when you have a smaller stop loss, the more trades you can enter. Okay, I hope you understand that. The lower the stop loss, the more trades that you can enter. Okay, but you keep the same risk. I hope you guys do risk management. Yeah, so this one can give you 1 to 40 risk to reward ratio. If you increase the stop loss all the way to the upside there, you can see it's now 1 to 17, which is not bad at all. Okay, so the whole point of this video, guys, is that it's very easy for you to do very well in this business. Okay, it's very, very, very easy, and it's real. When you see people, I know there are a lot of people just saw screens of they're in blues, and people can manipulate those things. Okay, never watch those videos. If you are trying to learn something, watch some. It doesn't have to be on my YouTube channel. There are real legit YouTubers that just teach pure price action, okay, that you can try on your own. Okay, so with this strategy, what I can tell you is, of course, you are going to lose some trades, all right, but I can guarantee you, if you just maintain the same strategy, just doing the same things over and over again, you just need one trade in that week. Okay, that is going to change everything for you. If you just stick to your risk management, you don't go into FOMO or anything like that, guys, you are going to make a lot of money. All right, so like I said, my website is in the description below. I'll even put it in the comments. If everything is just going to be there. Yeah, so I hope you enjoyed this video. If you haven't subscribed, please subscribe and like it. If you have any questions, my website is there, or you can just put them in the comment section. Otherwise, hope you enjoyed this. Until next time, happy trading.